We are kicking off today's market recap with a story that is reshaping how Wall Street thinks about one of the most storied names in investing. Greg Abel, the newly installed chief executive of Berkshire Hathaway, has made his first major capital deployment decision, and it is a dramatic one. Abel is committing billions of dollars into artificial intelligence infrastructure, a strategic pivot that openly departs from Warren Buffett's historically cautious, value-first philosophy. This announcement is landing on a turbulent market day, with the Nasdaq 100 off 4.8%, making the timing all the more striking and consequential. Here is the core fact. Berkshire Hathaway, which has been sitting on a record cash position exceeding $300 billion, is now deploying a multi-billion-dollar slice of that reserve directly into artificial intelligence infrastructure under Abel's direction. This is not a small equity stake in a single company. This is a structural commitment to the artificial intelligence build-out thesis. Abel is signaling that the conglomerate's capital allocation strategy has fundamentally shifted. Wall Street consensus had expected incremental deployment into financials, energy, and utilities, sectors consistent with Buffett's legacy. The artificial intelligence pivot significantly exceeds those expectations, representing a material departure from decades of defensive positioning that defined Berkshire under its previous leader. The deeper significance here is not just about artificial intelligence. It is about what this signals for how the world's most watched capital allocator views the next decade. Buffett spent decades avoiding speculative technology bets, famously missing the dot-com era and only reluctantly embracing Apple late in the cycle. Abel's willingness to plant billions into artificial intelligence infrastructure says that the secular growth case for this technology is now too large to ignore, even for the most disciplined value investors. Importantly, this is happening as market conditions make this bet even more bold and directionally aggressive than it appears on the surface. Let us name the tickers directly in the line of fire. Berkshire is the primary instrument to watch. It now functions as a proxy for artificial intelligence and technology exposure without the concentration risk of owning NVIDIA or Microsoft outright. For the artificial intelligence megacaps, this is a powerful validation signal. NVIDIA, Microsoft, and Google all benefit when the most credible institutional name in global finance endorses the artificial intelligence spending thesis with real capital. The Nasdaq 100, already down 4.8% today to 705.06, is seeking support near the 700 level and could find a floor if this Berkshire narrative drives institutional follow-through buying. Semiconductors, cloud infrastructure, and data center operators across the board receive a tailwind from Abel's endorsement. There are several critical watch points for traders and investors tracking this story. On the Nasdaq 100, the 700 level is technical support. A close below there would signal the artificial intelligence enthusiasm from Berkshire is not enough to overcome macro selling pressure. The Nasdaq 100 at 28,202 is testing its 50-day moving average, which is a pivotal zone. On rates, market conditions are the single biggest headwind to artificial intelligence valuations. Watch for directional shifts in Treasury yields as key support levels. The most critical near-term catalyst is Berkshire's Q2 earnings commentary, where Abel will presumably detail deployment pace, targeted sectors, and expected return parameters for these artificial intelligence commitments. The bottom line is this: Greg Abel's artificial intelligence pivot is a structural, generational bet that Berkshire Hathaway is repositioning itself for the artificial intelligence era, and the market is watching every move for signals on deployment pace and return expectations. If successful, it revalidates tech as a secular growth story even at elevated valuations. If the investments underperform or face regulatory headwinds, it raises serious questions about capital discipline under new management and invites a sharp correction in Berkshire. That is the full picture on Berkshire's historic strategic shift under Abel's leadership. Coming up next, another major story that is moving markets and deserves your full attention. Shifting now from macro pressure to the single most anticipated corporate event of the week, Apple's WWDC keynote this Monday, June 9th, arrives at perhaps the worst possible moment for big tech confidence. The Nasdaq 100 is down 4.8% today. The VIX has exploded to 21.51, up significantly in a single session, and gold, even with its safe haven reputation, is off 3.1% as investors slash risk across the board. Into that storm walks Apple, carrying the weight of a fledgling artificial intelligence strategy that has so far generated more skepticism than conviction from the street. The centerpiece of Monday's keynote is expected to be a meaningful overhaul of Siri's contextual awareness and on-device intelligence, the capabilities Apple has been quietly rebuilding for over a year after getting lapped by competitors. Wall Street is watching for three specific deliverables. 1. Clarity on how Apple actually monetizes artificial intelligence inside its ecosystem. 2. Demonstrable evidence of on-device processing power that protects user privacy while matching cloud-based rivals. And 3. Concrete rollout timelines rather than vague roadmap promises. The bar is elevated precisely because prior Apple artificial intelligence announcements received mixed receptions and left institutional investors without a clear earnings model. This is not merely a product story. It is a valuation thesis under examination. The entire megacap technology complex has been repriced lower on a single unresolved question. Is artificial intelligence capital expenditure actually translating into visible revenue and margin expansion? Apple, as the world's largest consumer hardware platform, is uniquely positioned to answer that question with a billion-plus active devices that could run artificial intelligence natively. If Apple demonstrates a credible commercial pathway on Monday, it provides the market a proof point that big tech can execute on artificial intelligence return on investment, a narrative the market, down 2.58%, urgently needs right now. The blast radius here spans multiple sectors. Apple itself is the most direct read, but because of its index weight, a sharp move transmits immediately into the S&P 500 and the Nasdaq 100. On the upside scenario, semiconductor suppliers NVIDIA and TSMC would benefit from confirmed artificial intelligence design wins embedded in Apple's silicon, validation that the artificial intelligence chip cycle has a flagship OEM behind it. Microsoft, Salesforce, and Adobe would likely see rotation relief as proof that artificial intelligence monetization is real. On the downside, a miss accelerates rotation into value. The Russell 2000 is already under pressure, down 3.55%, and pushes more capital into the 10-year Treasury, currently yielding 4.54%. Traders should have a specific checklist heading into Monday. First, watch the VIX at 21.51 today. A break above 25 would signal genuine capitulation and would likely front-run any post-keynote sell-off in the Nasdaq 100. Second, the Nasdaq 100 is already testing intermediate support after a 4.8% single-session drawdown. A disappointing keynote could accelerate that breakdown with limited technical cushion below. Third, the 10-year Treasury yield at 4.54% is ticking higher on risk-off flows. Paradoxically, a terrible WWDC could compress yields further as capital flees equities. Gold is the concurrent tell. Watch whether it reverses recent losses if the growth narrative dims further through mid-June. Here is the cleanest way to frame this. Apple's WWDC on June 9th is a binary event landing inside a market that has zero tolerance for ambiguity. The Nasdaq is already down 4.8%. The VIX sits at 21.51, and every basis point of the 10-year at 4.54% is a reminder that capital has somewhere else to go. A credible, differentiated, monetizable artificial intelligence roadmap from Apple stabilizes growth name sentiment and gives bulls a reason to step in front of the selling. Anything that reads as incremental or derivative of competitors accelerates the rotation into value and fixed income that is already underway. Those are the two stories that matter most this Saturday. Full breakdown is up. If this breakdown gave you an edge, hit subscribe and ring the notification bell. We publish these deep dive market recaps every single trading day, so you never miss the move that matters.